Hi, and welcome to this week's Market Insights. Now get ready for a deep dive into the key events that could shake up the markets in the coming days. We've got major central bank decisions, crucial job data and corporate earnings that could drive market volatility. So let's jump right in. Now, first up, the European Central Bank's big decision this Thursday at 3:15 p.m. GMT +2. That, of course, is the interest rate decision. Now, a rate cut is almost certain, with the official rate expected to drop from 2.75% to 2.5%. But what happens after that? Now, that's where things get a little bit more interesting. While some policymakers support further cuts, others are cautious, especially with inflation still rising. Inflation in the Eurozone climbed for the fourth month in a row, reaching 2.5% in January. That was up from a post-COVID low of 1.7% last September. Recently, Belgium's central bank governor, Pierre Wunsch, warned that the Eurozone might be heading toward excessive rate cuts and should be ready to pause soon. However, the rate of around 2% by the end of the year is comfortable for him. Meanwhile, ECB board member Isabel Schnabel argued that the current 2.75% rate is no longer restrictive enough, while Italy's central bank chief Fabio Panetta said weak economic growth could push inflation below 2% in the medium term. Now, with such mixed opinions, expect some potential market volatility during the ECB's press conference. Now, last time, the ECB cut rates by 25 basis points on January the 30th. Now, that move was expected, and the euro initially strengthened, but later resumed its decline. So the question is, will we see a similar pattern this time? Okay, now let's head over to the US, where Friday's job data at 3:30 p.m. GMT +2 could bring us some big market moves. We are, of course, talking about US non-farm payrolls and the unemployment rate. Now, the Federal Reserve's next meeting is on March the 19th, and markets are almost certain that rates will stay unchanged. However, the latest non-farm payrolls and unemployment data could still shake things up. Now, in January, the US added 143,000 jobs, falling short of the 170,000 forecast and short of December's revised 307,000 gain. Meanwhile, the unemployment rate dipped slightly to 4%, the lowest since May of last year. Now, the mixed data left markets slightly uncertain, leading to a short-term drop in the US dollar before it quickly recovered. Will this month's report bring more surprises? That's the big question. But we'll find out on Friday, so be ready for some volatility and don't forget your risk management techniques. Now, let's move on to Canada. And this Friday at 3:30 p.m. GMT +2, Canada will release its February unemployment rate data, one of the key indicators ahead of the Bank of Canada's interest rate decision on March the 12th. Now, just a few weeks ago, markets were fully pricing in a rate cut, but now the odds have dropped. Well, what's changed? Well, in early February, US President Donald Trump and Prime Minister Justin Trudeau agreed to a last-minute pause on tariffs, easing some of that economic pressure. Shortly after that, stronger than expected January job data further reduced expectations of a cut. Inflation data also came in slightly higher than expected, adding to this uncertainty. However, some analysts believe these factors might not weigh as heavily in the Bank of Canada's decision-making. Economic slowdown and geopolitical risk could still push the central bank towards a rate cut later this year. Now, last month, Canada's unemployment rate dropped from 6.7% to 6.6%, surprising analysts slightly and triggering volatility in the Canadian dollar markets. Now, considering all of these market uncertainties, the reaction this time may be even stronger. So keep your eyes and ears open, stay tuned, and again, don't forget those risk management techniques. Okay, finally, let's talk about corporate earnings, where all eyes this week are on Broadcom. Now, on Thursday, after the market closed, the company will release its latest earnings report, covering the fiscal quarter ending January 2025. Analysts expect earnings per share of $1.27. That's actually up 47.7% year on year. Also expecting revenue of $14.59 billion. That marks a 22% increase year on year. Now, Broadcom plays a crucial role in the AI industry, designing ASIC chips used in data centers for major tech giants like Alphabet and Meta. Now, given that intense AI competition, this report could trigger some major market moves. As I say, those results are out Thursday after the market close, so do keep an eye on them. Well, that's it for this week's Markets Insights. Remember, geopolitical and economic events can drive market volatility and lead to unexpected price swings, so do stay prepared. Now keep an eye on our news and analysis section on the website for the latest updates. Thanks for watching, good luck with your trading in the week ahead, and we'll see you soon. Bye for now.